Hi guys, my name is Adam Meyer. I am back here with another video, and today I'm going to go over some of the markets and what we're seeing. I'm going to start with the charts first, just to see, get the bigger picture of what's going on and where's the market movement. So I'm going to start here with Bitcoin and Ethereum themselves. So we're going to see the buy that we actually did have up into this higher time frame gap that happened up within here that I mentioned in my chat a few weeks ago. We've reached up into this fair value gap, and also we started to hit some of these other levels that we are rejecting off of down here to possibly either accumulate here and go back higher, but more than likely looking to come down towards these lower levels because we don't see any signs of bullishness. We could get a little short-term rally up above these highs and then get another retest up into here for a short-term position. But overall, macro picture, we are still coming down into these levels, and we could probably get a pretty big long crypto winter. And as we notice, Binance, they can't even talk about their finances, just like how FTX went down. This could actually happen to Binance. So honestly, I'm not a financial advisor, but get your money off these damn exchanges because things could get pretty ugly in the world of crypto. And I'm prepared for it. I mean, I'm dollar cost averaging a little bit, like I always talk about, but these are lower levels we can still see, but be prepared just in case everything does go to shit. So we go over to Ethereum, same kind of thing. We have these equal lows here that we could reach down below these lows, lower into this area, but I do want to see a long-term consolidation here. But going over to the NASDAQ, this is really where all the meat is. That I like the stocks more than crypto now, especially at this point without the regulation in crypto. But as I was saying, we could reach down lower into these pre-COVID levels. Well, kind of where COVID did start down within here. We have a nice fair value gap still sitting down here that needs to be rebalanced from right here. We could reach down there. Notice how we just balanced this fair value gap here on the monthly time frame, basically to a point. So we are in order flow to the downside, working our way down there, but we're going to see. We go down to lower time frames. We do have this order block that's sitting right here on the weekly. And if we do accumulate right down here, we could then get some higher movement, possibly up into this range. And then we can see what happens there. All week, us in the group chat, we've been shorting this market down into these lows. But now we just need to wait for more price action to see what it wants to do within here. Possibly work up there, accumulate, maybe go back down or buy up even higher, depending on the news and everything like that. But I'm not trying to speculate, but dollar cost averaging has always worked in the long term. So obviously, I have my long-term account for long-term investing where dollar cost average every week. The more goes in as it comes down more. But then I have the short-term account where I'm trading it buys and shorts. So this week I said we've been shorting because that's what's been presenting in the market itself. So let's get into some news. So how long should Powell keep raising rates? So I'm going to go over some headlines here. This guy, Nick, he's pretty good in the Wall Street Journal. Some expect inflation to cool steadily the next year and want to stop raising rates soon. So what does that mean? They want to keep raising this year, and then next year they're going to slow down on the rates and maybe even stop, because what happens with the federal funds rate is they raise, and then it gets trickled down in the economy after throughout time. We can look here that this is the current tightening cycle that we're seeing right now. It's pretty damn quick compared to the years before. When they raised before. So we have really high inflation, so they need to get it right down. So they're just hitting the nail on the head with this one. They also say they worry that central banks might raise rates higher than needed to reduce inflation and cause an unnecessary deep economic downturn, and that could get pretty ugly in 2023 if a recession does come. But like I said, for us going forward, we really got to think about what we're doing day to day. Should we save money to buy this economic downturn, or should we wait and be scared? Because a lot of people are going to be sad, depressed. A lot of people are going to start losing jobs because that's what we're going to see. We're going to start seeing unemployment go up because these federal funds rates are going up. So federal fund rates go up. It's going to be delayed in the economy and trickle down, so these unemployment will go up soon too, and it's all coming together. We're starting to see Goldman Sachs even laying off jobs, as you can see here. They put too many jobs in during the right after the pandemic, because there was a huge economic boom when they started printing money like crazy. So now they have to slow down and cut off people. So that's going to happen with all types of jobs now. So we just have to get ready, in my opinion. And the Fed even says if we have to, we can always tighten again farther. So we're they're going to probably slow down next year, and then if they need to get inflation down, they're gonna tighten up even more, or they can loosen, because they can always start printing money again if things do get bad. But that's just what we're starting to see here. We look at all these different headlines. We're starting to see history says the Fed can't meet its inflation goal without a recession. I mean, just go to all these different headlines. These are true. You don't want to stick with just the headlines, but we're probably going to be in a recession next year, and I'm personally just getting ready. So on the the mind of everybody else that's watching these videos. Like, we're going to start to see something really cool happen next year where everything bottoms out. The market could be at the bottom right now, but it could not be. But real estate is going to probably be slowing down next year, and I'm getting ready. Like, my town is already down over 10%. Because I live in like a really wealthy town, so we're down over 10% since August, which is just crazy. People buying those homes before then, and now it's just they're underwater on their loans. So like, let's say they buy a house for $750, and now it's worth $550. You know what I mean? So like, they're underwater on their mortgage. Yeah, they have a better interest rate, but they're way underwater on the equity they have in the house. So I'm personally just getting ready and looking for good deals. I might even start lowballing people here in the coming months to buy a house, because 2023, that's what I personally want to do. So I'm going to stick with a job I'm at so I can get a good loan, and then dollar cost average into houses, I guess you could say. I want to buy a property and then see where we can go from there as just like an investment property, not even one to live in, you know what I mean? I'm going to stay in the one I'm at. But just keep looking at these headlines, keep seeing what's happening, because I think things are going to be good in the future. So I'm going to wrap this up here. Let me know if you have any questions. Love y'all.